We're going to watch this video called No Clickbait, just trading advice that actually works for all levels of traders. So I'm really stoked to see how good this is. I bet it's amazing. Let's see.
Discipline and keep taking poor trades out of boredom or frustration. Have you ever tried acting like a fucking professional? When I'm taking a position, I ask myself, how surprised will I be if this stops me out? If the answer is anything less than very fucking surprised, I don't take the trade.
I read those two quotes before every trading session for months because they form the foundation for everything about your trading strategy and all psychological challenges. It makes you follow your rules, stay disciplined and focused, and execute your edge. However, remember that psychology mostly only matters once you have an approach that gives non-random results, and it's only what can stop the edge from being properly executed. Similarly, in order for most advice to even apply, you need to have that edge, or at least a very clearly defined approach. Just staring at a chart or doing random trades will accomplish very little. You can learn more about.
So I'm already in huge agreement of this. So let me pull up my 25 results real quick. Reason being is I want to run a Monte Carlo simulation on this to give you an idea of why I do what I do. Okay, so let's go over here. No. Let's go over to the Discord. And in the Discord, we have a who created this? I forget who created this. Hang on. I'm gonna give full credit to Greg. Greg is awesome. Greg is a rock star. So he created this Monte Carlo simulation for us. Now, a Monte Carlo simulation is basically it's running lots of different scenarios to see what your results would come out with. So all you have to do is know some numbers. Okay. Now, granted, this is only 10 trades for the year. Okay. I know that that's not very many. I understand this. Okay. But looking at this, oh, wait a minute. That's the wrong one. That's the hedge fund one. Hold tight. That's the one I'm doing for my family. I was like, wait a minute. That doesn't seem right. That doesn't seem right. 22 trades. Yeah. Because we started that one later. Okay. Year-to-date return so far, 53%. Now, granted, this is with open profits. And as you can see, stair step, stair step, stair step. This is how it's done. This is how it's done. Now, what you're looking for is your average win, your average loss, and your win rate. And you can plug that into here. Yeah. Your win rate for me is 63.64% so far. 63.64. 63.64. Okay. My average win, and we can use just dollars here in this case. So 4,051 is what we would put in to make it easy. 4,051. You could do $40.51. Doesn't matter. Average loss, $15.20. Okay. Now, granted, I am telling you for sure, I understand that the data set is limited here at only 22, but that's what I can go with so far this year. We run the simulation here. Now, your objective is to come up with a plan that you can say works, or even in the absolute worst case scenario, you're profitable. So let's see here. Final equity. In this case, on these trades that are just $4,000 wins, oh, 15, hang on, I did mess that up. 1520, 1520, 1520. There we go. That should be better. Let's recalculate that. Okay. Final equity here. $1 million with these numbers. Or on average, 738,000. Or the minimum, 581,000. So what this says is my very worst case outcome is still wildly profitable. Now, here's the other thing. I know my strategy. I know it works. I'm not scared to run it. And I have the data to back it up for years at this point. Can you say the same for your strategy? Can you provide the data? If you cannot, here's a great thing. You actually can do it with paper trading. Now, is it manual? Is it a lot of work? Yeah, for sure. Is it worth your time to paper trade and figure out a strategy that works for you, that you can change your life and all future generations' lives? I would say yeah. I would say yeah. I would say it's worth a few hours of time to figure out what you would do and what you would not do. Make some edits, try it, run that again. What would you do? What would you not do? And once you have come up with a plan where your worst case scenario is wildly profitable, that's when you're ready to start trading. That's when you're ready to start trading. I mean, in all reality, right? But most people can't do this. They don't want to put in the work. They don't want to see how things are done. They don't want to have to go through and do all that manual effort, right? They'd rather go, wash dishes the rest of their life. They'd rather go work a 9 to 5 the rest of their life versus on the weekend, drinking some coffee, putting on your noise canceling headphones, telling the kids to beat it while you're working, and coming up with a plan to change your financial future to the extent that no one's ever seen before. I would say it's worth it, right? If it's worth it to you, put it in the chat. Worth it. That's what I would say. So let's go back to this.
Edging and more for free at imintrading.org. Now that we got that necessary prerequisite out of the way, here are my personal favorite pieces of advice. Our brains did not evolve for us to be happy. They evolved to avoid danger and pain, aka bear. We're designed to avoid the bad. It's partially why bad things hurt more than good things feel good. Tom Haugaard's pain chart is excellent for this. Many of the irrational things we do in trading might just stem from the desire to avoid pain, like deviating from our strategy by not taking losses or profits when we're supposed to, changing the position sizing, and much more. Which, of course, brings us back to acting like a professional, staying focused, and
hang on a second. I actually want to take a screenshot of this. This is good. I'm going to take a screenshot. I'm going to save this one. What's the reason for not taking a loss? I argue there is one reason we tell ourselves, and then there's another real reason. The real reason is always the same. Letting my loss run, I'm hoping that's a conscious reason, subconscious reason to avoid pain. Letting my loss run, indicator, etc., to avoid pain. I'm taking my profits. You can't go broke taking a profit because you want to avoid pain. I'm winning, so I am reducing my stake. I want to take it easy now to avoid pain. Wow, this is really good. I'm saving this. Hold tight real quick. In YouTube speak, I just pilfered this. Just stole this guy's content. Oh my God. Okay, save that there for now. I'll fix it later. Okay, keep going.
More. Which, of course, brings us back to acting like a professional, staying focused, and understanding the true weight of what's required to make trading work. That includes finding the solutions to your particular struggles, creating reminders for them, and doing the work that's required to ensure you don't repeat the same mistakes over and over again. Nobody's here to hold your hand, and there's no chance of succeeding if you can't get into some type of mindset that keeps you from being stupid. This quote.
Okay, so there's the best trading psychology book out there is called Trading in the Zone. And one of the things he talks about in that book is there are unlimited opportunities to do unlimited different trades every single day. There's no boss sitting on your shoulder or looking over your shoulder telling you do this and do that. You have the opportunity to do whatever you want. And because of that, people mess that up all day, every day, because they have the opportunity to do whatever they want.
Quote should encapsulate every other reminder, all problems that you're dealing with, and everything else. It's sort of just the British version of saying lock in. And when it comes to the actual trading part, there's nothing better than this because of how strongly it orients you with your trades. Conviction, high probability setups, whatever you want to call it, I love this quote. However, do you notice any problems with it? Well, it doesn't apply to approaches with frequent small losses that are offset by larger wins. If you've got a 20% win rate, then you're expecting most trades to fail because that's what you've designed. If you weren't thinking about that already, then there's your first lesson in making sure you're skeptical and analytical about everything you see and hear, no matter who it comes from. Lots of advice is based on an underlying assumption, and so it only applies with that assumption in mind, and only if that criteria is met. If you're part of who this quote applies to based on how you trade, then it's excellent for us. Anyways, since we evolved to be bad at trading, we should limit the opportunity for our humanness to cause problems. One real actionable way to help with this is by automating everything you can, specifically when it comes to trade executions. There is no advantage to using a mental or manual profit target and stop loss versus just having the computer do it automatically for you. Many trading platforms now have chart trading with custom brackets, so the stop loss and profit targets are automatic, as seen here from one of my older live streams using NinjaTrader. This happened to be the final day of passing a trade day evaluation. More info on my approach and prop firms on my website. Remember, the point of this is to eliminate the human aspect of trading as much as you can, which reduces the chance of big mistakes. Don't give yourself the opportunity to do something stupid. That's why max daily losses that automatically lock you out of your account until the next trading day are so great. Now, Jim Simons consistently achieved the greatest public returns the world of finance has ever seen. I think. I don't know. So how exactly did he do?
Oh, that's funny. I didn't realize he was going to be talking about Jim Simons. We're going to be watching another video about Jim Simons, the man who solved the market. There's the book written about him. One of my trading heroes as well. So to go back just a little bit, I disagree slightly. Now, if you are an intraday trader, and it showed like he was using looked like 1 minute candles, right? The ability to make those very fast decisions is hard for a lot of people. If you can automate those decisions, that makes a lot of sense. But if you're trading like I trade, right? You take a position, you don't know how long you're going to hold it. You may have to get out the very next day, or you may get out 2 weeks later. In other cases, it's called swing trading. I know what I'm going to do, and I know at the time that I'm going to execute it, because as you saw in those candles, they can move around a lot, right? Imagine that's a daily candle. Do you need to trade at 10:45? Do you need to trade at 1:15? Do you need to trade at 11:32? I don't know. You do you. But I like to trade at the end of the day. That way the move has already been established. We know what's going to happen by the size of that candle. And a great example of this is PayPal. So as of the time of recording, I own PayPal, and it went down significantly during the day and came right back up. Right? That would suck to put on an automatic take stop loss or to just bounce right back up. Another reason why I just put my trade on, and then I, as the trade manager, as the portfolio manager, if you are managing any sort of money, you are a portfolio manager, right? Be proud of that. Now act like one. As the portfolio manager here, I am making sure that I am going to get out only when my exit signal is hit, only at the end of the day. So if you need the automations to help you, go for it. But when you act like a portfolio manager and you're managing your portfolio, you don't necessarily have to. So I somewhat disagree with that, but I know that it definitely is going to help out a lot of people for sure. Let me go to the video here.
Do this. What? He didn't reveal his exact strategy and kept the models to himself so his fund could make billions from it? Why would he choose to make billions of dollars when instead he could have made a couple $100,000 by selling a mentorship or course? Because if you find some type of inefficiency, edge, imbalance, pattern, whatever, keep it to yourself. If you can't make money trading, then sell a course or mentorship. Take a look at these 3-minute candles. There are 8 total, which means this is 24 minutes of price action represented on a 3-minute chart. This is what that same action looks like on an 8-minute chart. Instead of 8 3-minute candles, we have 3 8-minute candles. Riveting stuff here. Stop falling asleep. And after switching to a 24-minute chart, all of that action gets reduced to just 1 candle. And what about this? What's going on here? What is going on? Well, the only difference between the 3 representations of the exact same data is how much information we see. There is no inferior or superior time frame. There's just picking the size of your filter. Do you want to see what happened inside of the candles or not? That's it, which I've said many times and will.
And to that point, I wouldn't even notice any of these candles because I only trade on the daily time frame. Everything else is just noise. I hope that he brings that up, right? Focus on your time frame, ignore everything else, because it can be very confusing. It can cause FOMO, it can cause fear, right? But if you're just focusing on daily candles and that's all you care about, then really there's no stress, right? Because look at this one candle versus all these little candles. Any one of these candles could have caused you to make the wrong trade when all you needed was that.
Will continue to do, because when people say things like that time frame is too small, what they're really saying is you're seeing too much information. And wow, suddenly that sounds like a pretty stupid thing to say, doesn't it? Bang. Lesson number 2, maybe, about using your brain when you hear someone making a definitive statement about what you should or shouldn't do.
Okay, I'm going to absolutely disagree with this. You're seeing too much information is exactly what I'm trying to say. If you're seeing all that information, it could potentially cause you to make the wrong move. You don't need that. You don't need that in your life, right? It's okay. Let's use this. Let's try and come up with an example of seeing too much information. You're driving from Dallas to Disney World, right? Every exit that you pass. Okay, here we go. See if this will turn out to be decent. Every exit you pass while you're driving from Dallas to Disney World is information. Do you need to know exit 92? Do you need to know exit 117? Do you need to know exit 312? Probably not. So why even bother, right? Just let them pass by you, right? Just ignore them, block out the noise. But when you get the Disney World exit, you see the greatest place on earth, or what do they say? Happiest place on earth. That's the exit I need. That's the one that I'm focusing on. Everything else is noise. Everything else is too much information. And to Senior Wahoo's point, do you really want to babysit your stock all day? I don't. I got other things to do. I'm trying to go see How to Train Your Dragon today. I don't want to be watching that. I don't want to be watching all these little candles. Who cares? There is a point of too much information. I say focus on your time frame and only focus on your time frame, and everything else is noise.
A lot of opinions going on in the advice world of day trading. A lot of opinions are stupid, but also I'm just being a jerk. Most of us got into trading by learning from fake gurus on YouTube, which means it's not really a beginner's fault for propagating the dumb
I
information.
know, and that's such bullcrap. Real gurus, which I shouldn't call myself that, real traders have put out 2,000 videos and nobody saw them. Finally, I started playing the YouTube game and I started getting views. And now you're making money because of that. Thank you, YouTube. Thank you, YouTube gods.
Information taught to them by people who aren't even experienced enough to understand the problems in the advice that they share. They didn't know that, so question everything you hear and break down whether it makes sense or not. Very quickly, it's worth mentioning that the indicator called average true range, or ATR, with the
Which is one we use all the time.
period set to 1 instead of its
I would use the default, but let's hear why it says set it to 1.
default of 14, can be extremely helpful as a way to quantify volatility and any changes to it by showing you the exact total range of each candle. Doesn't take too long to become familiar with the typical sizes of candles based on what time it is, which can prevent you from making mistakes due to changes in that volatility. Since we are completely unable to guess the time frame of a chart, which is proven by this video if you want to take the test yourself, ATR is great for immediately telling you whether a trade based on price action will require any changes in size to the profit target or stop loss. However, as seen by this yellow moving average, all indicators just reinforce what's already there. Nothing actually changed, the indicators have no edge on their own, and yet reminders and reinforcers are helpful. So use whatever you want as long as you understand the limitations.
Interesting. I do say something similar, which is create your own plan. My plan's going to be different from your plan, and it won't work for me like it works for you. Create your own plan and go with that. That's interesting that he's saying using the 1 period on your ATR. I'm not planning to change anytime soon, but just interesting.
And don't get scammed by paying for an algorithm or indicator, because remember from Jim Simons that you keep it to yourself if it works by itself.
Okay. So I've heard that before. Now here's the deal. We priced Outlier at such a ridiculously low price on purpose, right? We're trying to help you save money, save time, make money, and start winning with less risk. Our job is to not make money from you. Our objective is to make money with you, right? It's 82 cents a day to get access to Outlier, right? There are people who, I won't name names, but their name starts with F and ends with an X, and in the middle it sounds like Elix, who charge $84,000 over the course of a year for his training, including options. $84,000 a year for basically YouTube videos. Good gravy, right? Outlier is 82 cents a day, right? You get the annual pass for just $299. And if you're on the monthly pass, you can upgrade and save 64% off the regular price with just 1 click, right? That is our objective. We are trying to take back the market. That's what Mark likes to say, trying to take back the market. And Outlier is tremendously helpful. Shameless plug. That's my literal job as CMO of Outlier. But there is a case to do this, right? We are trying to make the market easier for people to understand how to trade. There you go. I still remember when 299 was a limited time special. Yeah, and when we upped the price, the elasticity didn't allow it, right? So we went back to 299 being the total price. I don't know if you know this, but at one point we offered a lifetime access. You're gonna wish so bad you got it for $79 total, all in. That's it. Outlier at one point, it was very limited because we needed customers to give us feedback. We were like, okay, how do we get customers? Let's offer it for $79 one time for lifetime. It's never going to happen again. Sorry.
We'll talk time. Most traders who succeed aren't earning enough to replace a full-time job, but some are, of course, making a lot of money. I've seen it myself. However, it's fine to have realistic expectations, and honestly, a big chunk of profitable traders aren't even outperforming the overall market, but they're making consistent money through a process they enjoy. Well, maybe they hate it, but honestly, I don't know how you could reach profitability without enjoying the process because of how brutal trading is. Either way, most people are better off swapping out the Lambo aspirations just for the idea of making a little bit of side money from a process that you actually enjoy. Emphasis on enjoy. Ironically or not, and perhaps just coincidentally, I only started getting payouts from funded accounts and making a very small amount of money after switching my thinking to that. Full breakdowns of firms and reviews on my website, but don't use them if you don't want to. George Washington said that comparison is the thief of joy, so only compare yourself to people you're better than, like British pe- people. No, he didn't. But the first part of that quote is good because there will always be people sharing massive payouts and returns on social media. A lot of them are fake, some of them are real, but still, you don't know what truly went into accomplishing that. And Twitter/X is by far the worst platform for newer traders. And either way, trading is a solo journey. It is you versus you. Focus on yourself, king or queen. Mark Douglas said that you'll never know the reason why price action did anything because it's moved by thousands of different participants, all with.
I don't know if you caught that. Mark Douglas is the author of Trading in the Zone. That's what I mentioned earlier. Yeah, you're never going to know why. In fact, it drives me crazy when I see, like social media posts or financial media posts. It's like the market is dropping because of the war in Israel, right? And then like an hour later, the market is up because traders are digesting the war in Israel, right? Give me a freaking break. You don't know why. All you know is that it is moving. And that's all you have to know. If it's moving the direction you want it to go, sweet. Let me hold my winner or look for new trades. If it's not going the direction you want to go, I'm not interested. Or I need to get out of my trade. Simple as that. Why? Doesn't matter.
Varying degrees of influence. So sure, use your approach as a framework to describe, assess, and analyze price action, but don't say with authority the exact reason why price actually did something. Unless the people responsible for moving it tell us, we'll never know the real reasons for anything happening. And no, there's no master algorithm that controls everything. I'd make a comparison to believing that the earth is flat, but I wouldn't want to upset that community again. Actually, yes, I do. The few comments per month about how I'm stupid for believing that the earth isn't flat are entertaining. Keep them coming. Mark Douglas time, but I'll be reading his quotes instead of showing the clips of him saying.
By the way, Mark Douglas is no longer with us, but he was a market wizard. There are videos like 10-hour, 11-hour long videos of him teaching trading psychology. You should absolutely go watch those, right? Just put your headphones in, go on a long walk, and just enjoy somebody teaching you all the trading psychology you could ever want to know. It is so cool that we have this on YouTube for free. So you really should take advantage of it.
Them so that his wife can't copyright strike the video, since apparently I'm not worthy of adding commentary to what Mark said. And again, remember that most psychological trading advice only applies once you have an edge, which I've been saying since 2022. Mark was very clear about not putting too much emphasis on individual trades because everything is just a distribution of probabilities and should be treated accordingly.
A lot of this you hear me say all the time, right? I don't know the outcome of any individual trade, but over a series of trades, we can apply the data set and have an expectation of what's going to happen, right? Profit is a byproduct of acquiring trading skills, right? If you are a profitable trader, you didn't do so on accident, right? Nobody gets successful on accident, right? Don't confuse hope with intuition, okay? I don't think anybody needs to be trading any sort of intuition. Detach from the outcome of individual trades. And that's why in my trading plan, I really like to reinforce those tomes here on this slide. Before I put on a trade, before I do anything on a trade, I like to go over this, right? There are no expectations on the outcome of this trade. He probably says that exactly, right? Doesn't he say? Yeah, you can't know the outcome of any individual trade. No expectations on the outcome of the trade. No profit targets. Let's see. Detach from the outcome of the individual trade. Profits, blah, blah, blah. Don't confuse hope with intuition. Learning to trade without fear is a learned skill. Yeah, no fear in this trade. I just have a plan to exit when one of my exit signals happens, right? That's why I go over this every day, is because I want you to understand, like, these are timeless principles. We want to be always looking at timeless principles.
accordingly. If you expect something to happen 60 times out of 100, you don't know exactly when those 60 will happen, and it's stupid to get upset when it doesn't work since losses are expected. Move away from individual results, take a step back, and look at the overall performance. There are actually a couple of my videos about him still up on the channel, but let's keep that between us so you know who doesn't take them down. I'm not 100% sure here, but I think it was Tom Halgard who said it can help to switch your expectation from a trade winning to it failing. Of course, individual trades shouldn't.
By thinking about risk first, right? I'm always talking about being risk first. If you understand that any potential trade, even with the greatest setup in the world, can still fail, you'll be looking at it from a risk first perspective.
Be focused on too much, but that little trick is great for reducing the emotional toll of the results. Wouldn't you rather be pleasantly surprised by wins and emotionless at losses rather than emotionless at wins and disappointed by losses? Anyways, Mark also emphasized having a process versus results mindset, not confusing hope with intuition, and that executing your edge without fear or hesitation is a learned skill that takes considerable effort to achieve. And in response to those popular phrases like the trend is your friend and cut your losses quick and let your winners run, he said, who in the hell knew what that meant and how to do it? Which I love because those phrases are in the category of bad advice that's vague enough so that people can blame you for misinterpreting.
That's why you create rules. What does that mean and how do you do it? You create the rules and then you just follow your rules.
It if you fail, yet they'll credit the advice if you do well because of it. It's just wishy-washy nonsense that means nothing, especially cutting your losses quickly and letting your winners run, because it only applies to very specific trading systems. As discussed in the Words of Wisdom video, the size of losses versus winners only means something once the win rate is factored in. It's no more valid than letting your losses run and cutting your winners quick, because the results of that are only dependent on the win rate. Enough of that though. Most importantly, since it builds the foundation for everything that you'll end up learning and doing, be skeptical, analytical, and separate the person from the message or idea. Some fraudsters can give great advice, and some good traders can give terrible advice. Just use your brain and think about it objectively. Do not get attached to gurus, and don't do all or nothing thinking. This video was just a simple collection of some of my personal favorites, but I'mInTrading.org has actual guides and other topics you need to understand for that.
All right, so that was a decent video. I obviously didn't agree with everything, but in a nutshell, I think the real takeaway here is making sure you follow a plan that works for you, making sure that that plan is proven mathematically that it works for you, and making sure that you can actually follow the plan. That's the hardest part, right? I had plans for years that I thought were brilliant, and then when I felt any sort of pressure, I couldn't pull the trigger to exit the trade, right? I had the hope, I had the dream, I had the fear, I had all of it. But what I didn't have was the courage to follow the plan that I had created on my own. And that may be something you're struggling with too. And the only way you work on that is by getting the reps, right? Put in the reps and get better at it. So listen, if you're ready to save time, make money, and start winning with less risk, click one of these two videos and we'll talk soon.